everyone. Welcome to Scrolling with Ceazor. Today is January 22nd, 2026. I got a lot of tweets for you today, but as always, this is not financial advice. This is all my biased opinions based on the news that came to me. So today I've only gone through my following tweets. I didn't use For You today because I found a decent amount of stuff to talk about. So let's get started. I've set my timer. Let's see if I can get 30 minutes or under. Okay, I think I can, but let's check it out. Okay, so the first one here we have is a tweet by Liquidity, which is the bold. I talked about this yesterday. I retweeted this tweet, I think, yesterday, but I do feel it requires some mentioning. Okay. Basically, if you are a bold LP, so if you use bold pretty much anywhere on mainnet, then you have an airdrop of these APS tokens on Flare, which is a friendly fork or forkonomics fork of Liquidity on another chain. The key thing is that this is an ongoing thing that's going to last for 40 weeks. However, the other key thing about this is that this is not the only one. They have, I think, six live forks right now. So those other forks also need to take part in this airdrop or this kind of giving back to the original protocol. So I find that to be pretty good. The actual yields for using Bolt on mainnet are substantial enough as they are to warrant considering it. The protocol is completely immutable, so it's like they're not going to change anything on you. Of course, there is smart contract risk as always, but yeah, you can take that into account. But yeah, so you can check it out, this tweet here. You can, dig a little bit deeper. I have a video, so it does say there will be 10 or more airdrops to follow in. So I said 6, but it's actually 10 plus airdrops in 2026, a whole bunch of other ones. So check that out, consider it. Again, I'm quite biased. I have Liquidity tokens. I've supported this team for a long time. They've given me a donation in the past. And I like the protocol. I'm using it. I'm farming this airdrop. So biased as well in that sense. Okay, moving on. So here I retweeted Mark Richardson. Mark Richardson's the the product lead at Bancor and Carbon DeFi. Carbon DeFi is a protocol I use a lot. I really like it. Here he is. Basically, he tweets out about this thing called Terse by Token Engineering. And if you go through and you read his article, you will see that what he basically talks about is in crypto there are two kinds of people. I get maybe there's more than two, but you can separate them into these two kinds of people. He talks about the events that people go to, the crypto conferences, and those tend to be very business orientated, kind of marketing endeavors, right? And that he says that they're not a bad thing, but there is this thing called EthCC Token Engineering Research Symposium, where it's actually real legitimate research. So the guys who get invited to do this, they're not doing it to try to shill their product or their token. They're doing it to kind of bring the truth of design and mathematics to the surface for everyone to see, and to debate things in it like a scientific academic manner that you would consider something like any scientific community, where they are allowed to debate each other, where they're allowed to use facts to argue with each other and present their findings in a controlled manner in that sense. So check out his tweet here, check out his thing. This is a very LinkedIn thing, so it's not very X friendly, but you can check out his article and so forth and read it at your leisure. Okay, so next one is Privacy Pools put out a guide. It's how to fund your trading account privately on Hyperliquid, Lighter, Aster, Avantis, etc. So basically it teaches you what is what is privacy pools. I think I do owe a video for these guys, in the sense that I've never done a video on privacy pools, but maybe I'll consider doing a snack sandwich video on it in the future. However, it's pretty straightforward. So you go through, you can swap and basically have some privacy on a fresh wallet, right? But what they're doing here is they're kind of showing people step by step how to get into like these decentralized perp exchanges like Hyperliquid or Lighter or Aster, Dex, and Advantis and stuff like that. So they're basically showing you step by step. Like step one, go to privacy pools, deposit USDC on Arbitrum with your funding wallet. Once approved, withdraw it with your fresh trading wallet, and go to hyper app .liquid, connect your wallet, press create account, and so like they're step-by-step guide how to do it. Because what some people are very good at trading, and they don't want like their socials and their personality to be linked to this trading activity, because they don't like want people to say things about them, and they don't want people to show up at their doorstep with a wrench, right? So like privacy is important, right? So you can check out this post, especially if you're looking to try to privatize some wallets. You can use privacy pools to do it. The next tweet I have is Railgun, which is another privacy option on mainnet. I did a video on it like 3 years ago, and I'm not sure how accurate that thing still is. So, but you can check that video out if you would like. But you can also go through and read this, and it kind of talks a little bit about how Railgun currently works and how to get privacy. It says private DeFi 0 to OZEC. I'm not sure what OZEC is. I should probably read this before I shill it, right? But anyways, you can check it out and decide whether or not either of these protocols are a good way for you to privatize some of your assets or your wallets and so forth, okay? So the next one we have is Alchemix. Alchemix is a long-term favorite of mine. I really like this protocol. It's a protocol where you can take loans, interest-free loans that are self-repaying. V2 is about to get migrated to V3. I did a video on it maybe yesterday or the day before. You can check my YouTube, or maybe I'll just link it somewhere in the tweets here. So they're saying that they have a new Alchemix, their governance token, Balancer V3 pool. I wanted to mention this because like Balancer V3, they have these pools. They're 80-20 pools. Now, this Balancer is the only place I've seen that has this feature and continues to have this feature. There might have been some Balancer forks in the past, but basically like a 20-30, like it's like 80% of the pool is Alchemix tokens, and 20% of this pool is WETH tokens. So if you go to this Balancer pool and you want to deposit without any slippage, then you just need like for every 80 token, or like if say the prices are equal, so for 80% of your deposit needs to be Alchemix tokens and only 20% needs to be WETH. So it's not like a normal 50-50 pool where if you deposit into like a full range 50-50 pool, you need half of your money needs to be WETH, okay? Now this is still full range, like it's not concentrated liquidity, it's still full range, so you won't need to do any rebalancing and stuff like that. And there's going to be incentives on this pool. So incentives have now been moved to the new core status pool. So this is the pool that will be incentivized now for WETH Alchemix tokens, okay? So you can check that out if that's something you're considering doing. Yeah, so that's it. Let's move on. Here we have trading tulips. I read this and I think it's parody. I think he's kind of being sarcastic and joking, but let me read it out loud to you and then you can decide for yourself, okay? He says, I've been I really been focusing on improving my OPSEC this year, and I think I cracked the code. I gave Claude full access to my PC and network, gave it my entire daily schedule, my personal health information, a complete copy of my genome, email access, bank access, and crypto wallet access, all with one goal in mind. How can I make sure I'm completely secure in case there's something I'm missing? To my delight, Claude prepared a nice list of things I can do to clean up my processes and is working on executing all the changes now. Insane time to be alive. Now, I like I said, I'm pretty sure he's being sarcastic here because I don't know if you can do all the stuff that he just said he did, right? But I think the point here is pretty strong. Like, be careful about like what you give your powers to, okay? Like, crypto and AI is getting very powerful. There's been Telegram bots in the past, and now they're becoming AI bots. And people are just like, oh yeah, trust the bot, right? And they're just giving the bot huge amounts of money. Now, if you have enormous amounts of money and you give it 0.1% of your enormous amounts of money, which happens to be huge, that's not the same as someone who has a net worth of $200,000 and gives an AI bot $150,000 to trade with, right? So just be careful about exposing yourself in the next few years. I would say it's gonna get very easy and tempting to give the we'll call it the AI overlords access to many things in your life. It's going to get very tempting and very easy to do, and I would highly suggest you to consider it very carefully. Okay, moving on, here we have a tweet by Katana. Katana's something I've been using for a while. I've mentioned it in the past, and I'm going to mention it again here. Basically, it's a VE33 chain with embedded yield inside. So all the tokens that you bridge to, Katana are yield-bearing tokens. So that on mainnet they're deposited in Morpho, and then when you get your assets on Katana, those Katana assets are interest bearing already, and then you can put them to work in Yearn vaults and stuff on Katana. But here we have a tweet that I'm kind of waiting for this because I've been farming this cat token. The cat token is basically the gas token, governance token of the Katana network. And so basically it says VCAT rewards will not be limited to pool fees alone. VCAT voters have 3 distinct revenue sources to start. And it does say will not. So I've been waiting for it and watching for it. And someone the other day said it's been live for a while, but I can't figure out how to deposit the VCAT, to get VCAT, which is voting cat, vote escrow catting. So pool fees generated by the pool VCATs vote for. This is the core VE33 mechanism. So yeah, so if you lock these cat tokens, and that's what you're farming and earning. You're earning APY because you're lending out your assets. Your assets are also lent on mainnet, and your assets are lent on Katana, earning APY. But then they're also over the top of that incentivized with cat tokens. Now, if you put those cat tokens into the locking mechanism or I'm not sure how it works yet because I don't have the docs yet. So if you VE33 your cat tokens, then you can vote on which ones get more cat tokens. Okay, so the chain itself is what you would consider Aerodrome or Velodrome or Remises or what have you, right? Exit fees, fees paid by users exiting VCAT during the cooldown phase. These fees are redistributed to remaining VCAT holders and acts as a mechanism for long-term incentive alignment. So yeah, if you lock and then you're oh, I want out, and so I just take the haircut and exit, that haircut is shared with the people who are still locked. Okay. Voting incentives, protocols and assets issuers can offer incentives to attract VCAT. This is an explicit part of the system to encourage innovation and adoption of protocols in the ecosystem. Okay, so then we have this, which is like basically bribes, right? What you would think of as bribes on Aerodrome or Ramses or whatever VE33 decks you want. But it's at the chain level, right? So anyhow, there's that, okay? So you can check out this and you know, consider if this is something you want to farm. Ceazor, full disclosure, Ceazor is farming this already. So yeah, I'm biased as well on this guy. Okay, moving on. Adding quotable crypto. He quoted. You know, I love to like hear all the stuff he's been collecting. He's really good. It's a really good Twitter thing to kind of just scroll through and read and kind of look at and stuff. So this person here, I don't know who this is. It's Ella Webb. Oh, I've blocked her for some reason. I don't know why I blocked her. Probably shilling some meme coin or something. Anyhow, so I will consider I'll unblock her on live here just for this. I'll follow her. And then if I see her shill some meme coin, guess what? I'm going to block her again. Okay. So, but she does say something here. She says, sometimes the only difference between gambling and vision is the story you tell yourself. Now, this is pretty deep in the sense that it can be looked at two ways. It can be positive and it can be negative. Like if you're buying worthless, pointless meme coins that pump and dump in a day, then the story you're telling yourself is still gambling, right? Now, if you're building a product market fit unique project and you're investing your money into the needs to build that by either, you know, marketing, auditing, maybe paying devs, if like you have a vision of a product and you're building that's very different. And the story you tell yourself about this is what makes you kind of continue to do it. So you can be telling yourself that, yeah, it's not gambling, I'm going to get rich, Anson shilled this, it's going to pump, right? Or you can be like, yeah, I'm going to get rich, this thing is awesome, I will love to use this product, it's missing from the space, I want to use it, and other people will want to use it. So, or you like, so just consider this. I think it's pretty deep in the way you're looking at it. I'm probably misreading what she's saying here. When I try to like out loud say it, I feel like there's something missing. But anyhow, you can check that out. Think about the stories you're telling yourself and how you're justifying the things you are doing and whether or not you're actually helping yourself or feeding some gambling addiction. Okay, moving on. Okay, so Luca here. Luca says he retweets Afusuka. And basically, Afusuka did an article on MEXC. It says, MEXC stole my profit from pre-market trades. If your pre-market trade on MEX becomes profitable, it can simply disappear. I lost $4,912 this way, and this happened twice. Here's how it works. Yeah, so this is why the ticker is ETH, okay? This is why I keep saying ETH, DeFi. Like, you don't need to pre-trade, like, pre-market derivatives on some centralized exchange. That's why they're getting you, like, because they're offering you what you think is alpha and getting early and trading early when you can just trade, like, if you want to like trade leverage, you can do that on chain permissionlessly with immutable protocols that can't steal your money. Like, why are people still using these centralized exchanges? In my opinion, a centralized exchange should only be an off and on ramp. Like, that's the only feature I use them for. I send my money there, I turn it into fiat, I send the fiat to my bank, and I pay for like my life needs. And that's it. Like, of course, centralized exchanges are quick to list things that are hyped. They're quick to list things that have trading volume, right? Like that. They're asking the projects to pay them to list their tokens, and then they're charging the users trading fees to trade it. So they're like double dipping on all of these things, and they're centralized exchanges, which are they really safer? Like your information gets leaked. Centralized exchanges have been hacked in the past. Of course, they're much safer now than they used to be, but so is DeFi, especially if you're not using protocols that are like new and built by teams that are inexperienced, right? And unaudited, right? So I don't know. Let's see what Luca says. Okay, so Luca, sad but true, MaxOx has been moving in a pretty bad direction. I think they all are for the most part. A friend of mine shared a story of what happened to him. I'm sharing it here because it's wild how he lost $5,000 after his profitable pre-market orders got terminated at the very last step like they never existed. When he contacted support, they brushed him off with a rollback talk and still gave no clear proof. Okay, so yeah, just stop using them, right? You guys, people just get off the centralized exchanges, these black boxes where you're giving all your power. Like the whole meme of not your coins, not your keys, not your coins, it's true. It's not a meme. It's not just a made up like joke. It's actual reality. If you trade, that's why I love ETH so much. Like ETH has the most on-chain liquidity, permissionless, undisputable, most on-chain liquidity of any asset in the entire world, right? Like there's no asset where you can trade permissionlessly as much as ETH. And that's why I love ETH so much, because of that. Like, you don't need to use a centralized exchange to trade ETH. You do for most other assets, like even Bitcoin. Like if you want to buy Bitcoin, you can buy wrap Bitcoin on ETH, right? And plenty, right? Like, yeah, I'm not saying don't do that. But if you actually want to buy ETH or Bitcoin, you pretty much have to use a centralized exchange, or you can use some of the bridges like Thorchain and stuff like this. But it's getting better. Bitcoin's getting better, but is nowhere close to the amount of liquidity that you can, if you want to buy ETH or sell ETH. Like, you don't have to ask nobody. You don't need to KYC nothing if you want to sell your ETH or buy some ETH, or pretty much any ERC20 token on mainnet. Of course, there's some considerations with like USDC and USDT and like centralized stable coins that have freezing powers and stuff like this. But yeah, think about that, guys. Let's move on. I got about 7 minutes, so I hope this news goes away, but it's still here. And there's someone complaining. Okay, so this guy Clarito's Way, he says Wally, the whale guy who got slashed. So someone slashed this guy because he shilled the Trove. I talked about this yesterday. He shilled the Trove, sort of. He's saying he didn't shill the ICO, but he got paid to shill Trove. And Trove, he didn't disclose it. And someone finally slashed him on Ethos. And so basically, so Wally got slashed. So because of that, minus 20 points to everybody that vouched or positively reviewed him on Ethos. And then he's like, Ethos Tech is total bullshit. So look, Clarito's Way is angry because he probably vouched for this guy who was doing undisclosed paid shills. And he got slashed because he vouched for him or he positive reviewed him. So he lost 20 points. And, this guy Wales got slashed. And then we have the founder of Ethos basically saying, working exactly as we intended it to. Reputation isn't only up. So I agree with like the founder of it. Like the whole point of this thing is you should positive review people that you trust and have positive feelings. You shouldn't be like, oh, I've gotten so many messages that, hey, let's review each other. Let's vouch for each other. And I'm like, I don't even know who you are. And he's like, oh, that's fine. Let's build up we'll get to know each other. And I'm like, well, okay, well, after I get to know for you, then I'll vouch for you, or then I'll give you a positive review. So like I think it's pretty great that I'm not saying it's great that this guy got slashed. I don't know. I didn't follow him. I definitely didn't buy the tokens he was telling people to buy. But the fact that Ethos, the fact that he got slashed and everyone who positive reviewed him gave him his power on Ethos, basically gave him his reputation on Ethos, also loses some points. That's the way the system's supposed to work. And I think it's pretty good. Okay, so sorry, Clarito's Way. I'm sorry for you to be angry. So yeah, but it does say 6 months after reviewing Wally. So maybe there's a little bit of problem there, Semprin, the founder of Ethos. Maybe he reviewed him 6 months ago, and this is maybe the whale guy or whatever, Wally, what's his name? Whaled Wally, whatever. Maybe Wally has changed in this 6 months. So maybe those reviews need to be there should be a time factor. Maybe 20 points, minus 20 points for someone who reviewed him in the last month, minus 15 points for the last 3 months, minus 10 points for the last 6 months, and so on. Something like that might be a better mechanism here. And maybe that's what Clarito's is kind of pushing towards. And that makes a lot of sense to me. That's logical. However, there is the possibility too that maybe this is something that you need to curate. You can't just go through and review everyone all the time and then forget about it. Maybe this is something that you need to maintain. You need to go through your review list and adjust it, change things based on what's happening and so forth. I don't know. People tend to just kind of go as much as possible and just get it done because they want an airdrop. So they're like, oh, if I review 1,000 people, I'll get a bigger airdrop than if I review 6 people, right? So maybe that's what's going on. Okay, moving on. Michael Saylor says, thinking about buying more Bitcoin. Love it. And I hope I don't hold Bitcoin very much. And to be honest, I'm an ETH maxi over Bitcoin. But if he can pump Bitcoin again, then everything else will pump too, right? To some extent. Moving on. So here's a tweet that I found to be pretty. So Ted Pillows. He pulls up all these charts. He's got 4 charts here, and he says one of these is not the same. And I'm gonna kind of open them up. So if you look here, we have U.S. Tech 100, and it's up 46% from where he drew the line. U.S. Russell 20,000 cash up 1.3%. Gold spot up 1.85%, and then Bitcoin down 0.8%. And this is so cherry picked and stupid. He could draw these lines however he wants. These time frames are tiny. They don't. I guess they are starting. Yeah, they are starting at the same time. So from the same time until present. But who cares? Zoom out a little bit. These are hours. This is an hour chart or something. Yeah, 1 hour chart, and he's look what happened with these guys. They all recovered, but Bitcoin didn't recover. But it did recover. You can see Bitcoin is down on the Bitcoin chart, and it recovered just as much, probably just as much or even more than the first one, the US Tech. Look at this distance. I'm going to use my mouse, so if you're listening, I'm sorry. So if you look at this distance here, this recovery from this huge red candle, and then here's the red candles, and then this recovery, that's almost the same as that. I don't know, I'd have to measure it, but it's so cherry picked and just pointless. I can draw lines anywhere. I could draw lines from here. Let's go back to here, and we'll see this is up, and then we'll drive from here. Maybe this is the same time, it's up, and from here it's up, and from, I don't know, you can't see this one, back here it's probably up. So, you know, just stop cherry picking and like trying to rage people in. Okay, let's moving on. Here we have RWA.XYZ. It's pretty obvious what that is. Trading real world assets exchange, right? I'm not really doing a lot of these real world asset exchanges because I'm like, why? You know, like it's still custodianed, like I maybe a little bit. But anyways, JP Morgan, the world's largest bank, is now live on Ethereum. View their tokenized fund on RWA. So yeah, you can check this out. A big picture of a giant skyscraper and my on-chain net yield fund. Management fee. I wonder what the interest rate is on this money thing, if there is any interest rate on this. Yeah, so it's, well, the U.S. Treasury is my on-chain net yield fund. So it's interesting. Take a look at it. I don't know too much about this. Like, I'd rather just use stable coins in stablecoin farms in immutable non-custodian protocols. But anyhow, you can check this out if that's something interesting. And it's not a bad thing that, you know, if JP Morgan's fund is on Ethereum. Not a bad thing at all. Okay, so next we have Makina. This is Makina had a small incident. You can read through this post-mortem. This is a pre-post-mortem. I'm still waiting for the full post-mortem. But there are two key things inside here that are very, very interesting to me. Okay, so first of all, the first thing is that somehow this pool was exploited the other day. Okay, and so forth. But you read through this article if you want a full idea, and then wait for the actual full postmortem to get a good idea. But this protocol has been very transparent. As soon as the issue happened, they posted to Twitter and said, you know, pull your assets out, blah blah blah. And then they did another like post saying what we found so far. And then there's this post where it's like what we found so far. So like they're being very transparent about this, which I like. So there's two things in here I want to highlight. Okay, so first of all, somehow the hacker was using the MEM3RCV pool, which is basically Magic Internet Money, which is stablecoin versus DAI, USDC, and USDT. This pool, somehow they used this pool to screw with the oracles on DUSD pool and was able to extract some money out of it. Now, I don't know how that works. I have to, that to me is kind of beyond my understanding at this current time. I don't know how this pool, like flash loaning this pool, was able to make this pool exploitable. I find that to be interesting. I hope to understand it soon. But what really interesting is here. Okay, where is this? Anyhow, I can't find it right now. Wait, in the following block. Oh, yeah, right here. This paragraph right here. So let me read it. In the following block, blah, 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 block. So in this block, in the first block, right, the exploiter deploys an unverified contract. So that means he deploys the contract. Like every time you deploy a contract to Ethereum or any kind of blockchain, it goes in as like bytecode, and it's like just completely unreadable language for humans. The computers read it, they understand what it means, but we can't read it and understand it, even though it's like it's written in a language, a coding language, which is also not completely understandable for most people, but it's at least readable, right? So an unverified contract is basically they didn't make Etherscan understand, like convert the bytecode into like Solidity, basically. So into the coding language that people can read and understand. So at this block, they deployed the contract that's going to exploit this pool. And then in the following block, an MEV searcher. So this is like someone who looks at the mempool, builds blocks, and looks for transactions to build blocks and stuff like that. So they decompiled this contract. So they, within like this one block, they took that contract's bytecode, they replicated it deployed a copy, a fork of it, ran the exploit, and took the money before the hacker could do it. So within 12 seconds, they basically front run and took it. Now, I'm not saying this, but I assume that this searcher is maybe a known entity. So this could be a white hack, like a paladin, basically, overpowering the evil hack. And this is a very interesting idea. Now, I'm not saying that that's what's going to happen, because I don't know if the searcher is a white hat or not. I don't know, right? So we'll find out, right? And then, there's a rocket pool validator who got paid a huge tip in order to use the searcher's block in the searcher's, transaction in the next block and run that exploit. But this is like wizardry to me. Like he's got his computer, like obviously he didn't do it manually. Like he didn't open it up and read it in 12 seconds and, type in some stuff. No, it's all like he set up his computer to look for flags of contracts that are deployed, decode them, look for flags inside the decoding that, this is an exploit, maybe it flash loans or something like that, right? And then copy it and run it. And then, of course, he wants to do this only when it's like profitable. Like he's not going to do it for every single contract that is deployed. Otherwise, because on mainnet, right? Otherwise, he'd be wasting money. So to me, it's just like, it makes me think about like how goddamn smart some people are. Like, and this is something he did while he's like asleep on the bench in the park or something. This is just happened. Like he set it up and then it just happens. And now, it's probably something he works on. Like, someone exploits something in the future, he probably goes through and reads through how was this exploit happened, what happened, and he adds it to like this computer brain he has, this like AI computer brain thing that just searching everything that's deployed and looking for this. I find this to be like absolute wizardry and just craziness. Okay, so you can follow along with this and find out what's happening. I lost a little bit of money in this, but we'll see what happens. I wish I don't. I'm trying not to lose anything this year. I lost quite a bit last year to exploits. So anyhow, check this out, follow this along, find out if I find it to be incredibly interesting. Okay, I got one more for you. I've gone over 30 minutes, so I'm going to try to be quick. This is how to become an elite trader in 30 minutes. This is a long form article by the Codex team who built this like AI trading agent thing called Codex. And you can read through this long form, basically long form how to become a elite trader in 30 minutes and just kind of read, like it's AI using, intelligent learning as well as like automatic triggers and like, let me read what this says. So Codex 3 combines both to become the most powerful financial harness in the world. So automatic triggers like a bot. So yeah, it has a bot that's going to automatically trigger trades. So buy, sell, whatever, blah, 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 based on the parameters, right? Intelligent reasoning in like a chat terminal. So you can talk to it and it'll give you reasonings and you can tell it things and it'll reason out what you're telling it to do, right? And institutional grade execution logic that neither of them have. So yeah, you can use all kinds of stuff. I've used this in the past. I'm not using it right now, but you can use all the traditional indicators as well as some new kind of indicators to help you to do some trading and stuff like that. So it's worth checking out. Anyhow, so that's it for today. Hope this has been interesting and useful. And thank you for listening and goodbye.